Hey everybody, Cigna here with the Bullish Bears, and in this video we're going to introduce Gamma. Now remember that these are introductory videos, so we're not going to go in depth on what each of these Greeks are. We're just introducing these Greeks. There are next level videos. If you go there, you will get the in-depth, nerded out version of each one of these, and I go into really great detail. For today, let's just keep it soft, just touching on each one of them individually. All right, so what is gamma? Gamma is the rate of change in the delta for a $1 move in the underlying market. If that confuses you a little bit, you're going to want to first go back and watch the delta video. Delta is the rate of change in the options value for a $1 move in the underlying market. If you were to look that up in the dictionary, that's exactly the way it's said, but that doesn't really help that much. What really does help is visually seeing that within the options chain and grasping the logic behind this. So let's do that. Here we're looking at gamma, and I put the column right next to the delta. And what I want you to focus on first is what's the delta value. So here on the May 11 options on the call side, 4 days from expiration, we can see that the delta near the money is 53 and 50. We can also see that the gamma is 3 through all of these strikes. It doesn't change. It's 3 for all of them. Look at how much the delta changes on every strike. We go from 32 to 35. We go from 35 to 38, from 38 to 41, 44, 47, 50, 53. Notice that they're 3 pennies away. Every strike we move, we're applying 3 pennies to the price of the delta, so that the next delta value higher is 3 pennies more than the previous delta value. When we get 2 days from expiration, we actually start getting into a higher gamma. We have 5, and then 4, and then 3. All right, so when we're trying to determine how much would delta change, if the stock price moves $1 higher or $1 lower, we can look at the gamma for that. The more the underlying moves in a single day, the more the delta can change. And that's because it will have more gamma applied to it. There's also different markets that have higher and lower gamma values. Now we're not going to get into, in this video, how gamma is even identified in the first place, where that gamma value should be, or why it's higher in some markets than in other markets, but let's go look at a different market for a moment. Here we're looking at RIG. RIG is Transocean Limited. It's a company with a stock price of $4.12, and you can see that the gamma at the money is 60 cents. That's way greater than the gamma in SPY. And we can also see that if you go higher or lower, meaning in money, deeper in the money, or out of the money, farther out of the money, that your gamma value gets smaller. So just like in all of the other videos, we have a distribution curve. And the greatest amount of distribution is near or at the money. And that when you move farther away from the money on either side, the distribution curve gets smaller. So why is this value so high in gamma? Well, think about how far this market would have to move before its option strike changed. 50 cents. But this is a $4 company. If it moves 10 cents, it moved 2% in a day. So you're talking about seeing a market move, what is that? 10% in one day just to change strike prices and to have that gamma applied. That would explain one of the reasons why the gamma is so high on this cheap stock. That's not always the case. For a more in-depth understanding of where that gamma value starts at, you'll want to watch the advanced level video that I have in the Next Level library. For today, what I really want to impress upon you is that the closer to expiration we get, the higher the gamma generally gets, and that the greatest concentration of gamma is near the money or at the money. And then I want to impress upon you that gamma is the rate of change of the delta for a $1 move in the underlying market. I know that's a lot to take in, but we're trying to do these videos in order so that they will make sense. By now, hopefully, you've already watched the video on delta, and having watched that one, this one would make more sense. If you haven't watched that one first, I highly recommend you just stop here, go back and watch the delta video, and then come back to this one. I appreciate your time, guys, and I look forward to seeing you at the next video.